When I saved up my first $100, a friend helped me open a stock account. She asked me what stock I wanted to invest in. That was the wrong question and bad advice. What she should have done was shown me this index list and had me go down the list to ensure that I had a good diversified portfolio before I started to choose individual stocks. Anytime you have a bit of extra money to invest, buy one stock from each category and keep going down the column. And when you're done with the list, start again at the top to ensure that you're diversified. For instance, buy one SCHB, one SCHX, one SCHG, all the way down. And when you feel that you're diversified enough, you can start buying more of one category and then start buying individual stocks. I hear a lot of people say, just buy the S&P 500 and that's good enough. But it's important to add international ETFs as well to your portfolio. For example, in 2025, international ETFs were outperforming the US ETFs. Send me an email for a free copy of this one-pager that I got from Schwab a long time ago. Let's take a look at VXUS, which is all stocks minus the United States. In 2025, it's returned 26.53%. Now let's take a look at VOO, or the Vanguard S&P 500 ETF. In 2025, it's returned 14.80%, which is very different than VXUS, which is returning 26.53%. So again, the US ETF S&P 500 is returning 14%, but international for 2025 is returning 26%. That's why diversification is important. This is just for 2025, but it gives you an example of where you might want to put your extra money after you're diversified. And in 2026 and beyond, you can increase or decrease your positions or shares depending on what sector is returning higher for that year. I've converted this to a spreadsheet so you can see how much it will cost you if you buy one of each ETF in each category. Schwab and Vanguard have almost the same stocks in each ETF, so depending on how much money you have, you can go down the list and buy one of each Schwab or one of each Vanguard or a combination of both. So if you buy one of each Schwab down the list, it will cost you $287 as of October 10th. If you buy one of Vanguard in each category, it'll cost you $2,150, depending on which ones you buy as of October 10th. Schwab and Vanguard have almost the same stocks in each ETF. So depending on how much money you have, you can go down the list and buy one of each Schwab or one of each Vanguard or a combination of both. But it's extremely important that you're diversified because each year a different category outperforms another. For example, small caps might outperform large caps, or international might outperform large caps, etc. If you don't like ETFs, I've also converted this list and looked up the corresponding mutual fund for the ETF. In a later video, I'll explain why I like ETFs and not mutual funds to track the index. In short, it's because ETFs can be bought and sold anytime the market is open. For example, at 8 a.m. or before 1 p.m. Pacific time, and the ETF will be bought and sold at nearly the price that you want. But mutual funds are only bought and sold at the end of the day, or around 4 p.m. Pacific time, and you never know what price you're going to get on execution. I also like ETFs because it has a lower management fee, and you can put a trailing stop loss on it. That is, let the stock ride high and protect on the downside. We'll cover that in a later video. Also in another video, we'll go over the sector chart so you can see that not every category performs every year, like real estate or tech. Most people want to get started in investing, but they don't know how. I put together simple, practical, and step-by-step videos on how to get started. Watch this video series and contact me to kickstart your wealth.